Welcome back. This is All Angles, and we all need some good news, don't we? Well, one of the top stories of the day will be the interest rate announcement expected at 3 o'clock this afternoon by the Reserve Bank. Will they or won't they? That's the big question. And if they do, will it be the expected 25 basis point cut, or could it be as significant as 50 basis points? We're crossing fingers. Or did the U.S. Federal Reserve's decision to leave their rates unchanged throw a bit of a spanner in the works? Well, let's put all of these questions to the experts. Mpho Lopiane, Alex Forbes, Chief Economist, and Herschel, Jawitz, the CEO of Jawitz Properties. Welcome. Thank you for your time. I don't know how excited you are. Should we be excited? And Paul, let's start with you. What are your expectations from that announcement? A cut, 25, 50 if it happens?
We're expecting a 25 basis point cut. I don't think we're ever going to get a 50 basis point cut from Lesotho, obviously saying that with tongue in cheek, but we're largely expecting a 25 basis point cut. And, that's premised on the shallow easing cycle that we've initially from the start been expecting from the SARB. So given that they have limited room to cut, we've only ever been expecting them to move in clips of 25 basis points. But certainly one can argue for much more aggressive approach to interest rate cuts, given where inflation is, headline inflation is at 3%. It had breached the lower bound, reaching 2.8 in October. So certainly from a real interest rate perspective, the SARB can do a lot more. But they did warn about upside risk, currency depreciation, oil, and the other stuff. So we don't think they'll be aggressive in their cut. So most probably 25 basis points.
Look, we'll take what we can get at this point, okay? After January, we will for now.
We will all take what we can get.
We won't look at gift horse in the mouth at this point. Herschel, what does this actually mean? I mean, property owners get very riled up at this time of the year. What does it mean for the property market? And if it is, as Mpho says, it's going to be what she's expecting, how should property owners milk this? How should they make the most of it?
So I'm not sure that property owners will be excited, but they'll certainly be encouraged. If you think about, we've come through a period of sustained high interest rates for a couple of years, 11.75%, and there's no doubt that homeowners have been under pressure, to retain their properties in certain circumstances, and high interest rates, low consumer confidence has put a dent on property demand, and hence property price growth virtually in all parts of the country have been very, very subdued. So what we have seen over the last 6 months of last year is an increase in consumer confidence and buyer activity. Off the back of better political news, the lights have stayed on, interest rates are coming down, so we're seeing better demand, better activity. It's not yet translating into property price growth, but if the trend continues, rates come down again, we will start to see an uptick in property prices, and that's good for homeowners, good for sellers.
Okay, we'll chat more about that, about that part of it. But Mpho, do you think the U.S. Federal Reserve's decision to leave their rates unchanged could have an impact on decision-making, and how far would it extend there in our decision-making?
It will certainly be a key consideration, especially going forward, as the SARB will try and keep an interest rate differential, a healthy buffer interest rate differential with the Fed. But we should also keep in mind as well that last year, in 2024, the Fed cut interest rates by 100 basis points, right? So they were a lot more aggressive to the start of the easing cycle. The SARB only did 50 basis points, right? So they still have some room to catch up to that 100 basis point easing. It will be a key consideration, yes, because the market expectation is that, the Fed is likely to hold for a protected period, even for the whole of the first half of this year. So it will be a key consideration going forward. What will also be interesting to watch is the SARB revised forecast. That will give us a good indication in terms of monetary policy going forward. How significantly do they upwardly revise the inflation forecast? What do they say about the balance of risks? That will give us a clear indication in terms of where they're likely leaning going forward.
And we have a whole new ball game in the U.S. now. We're not where we were last year this time. So, yeah, who knows what can happen?
Yeah, exactly. So the key risk there that they're going to be worried about is the currency feed through. So if we continue to see the currency depreciating, that does increase the price of our goods. It tends to be inflationary, and the SARB will certainly be worried about that pass-through.
All right, so Herschel, back to property, and that is one of the biggest markets here. And apart from all the global uncertainty and the what may or may not happen, especially with the US, what do you think is needed? You say it's a bit cautious at the moment, but what do you think is needed for the property market and property owners to make this industry boom again?
So I think a lot of that depends on where we are in the country. So the concept of interest rates, ESCOM, electricity, all of those things look far more positive if you compare where we are now to where we were this time a year ago. And we're seeing some of that positive sentiment coming into the market in areas like the Western Cape and Cape Town specifically, where we have seen better price resilience, some price growth, better demand driven by immigration and a whole host of other factors, versus, for example, the Gauteng and many other parts of the country which have shown less resilience. So it's two parts: it's financial and it's consumer confidence. And I think, for example, in Johannesburg, in the Gauteng, as an example, and I made the point recently, is that I don't think the differential is as much about Table Mountain and sea views and mountain views and lifestyle as it is about infrastructure, safety, potholes and governance. And the clear differential in markets that are thriving and not thriving is much more around that than around immigration, semigration, lifestyle trends.
And we also just you saw our education story and the deadlines. I mean, that also plays a big part for people, especially families are buying schools. I mean, just give us an idea. I mean, we're also seeing a lot of, people going to estate living at this point as well. How big a game changer has that been? And especially when it comes to education and the tie-in with where we're going to live and where our kids are going to go to school.
It is to some degree a game changer, but remember, estate living for the most part is targeted to a very, very niche part of the consumer and buyers who can afford to get into private schools. But we are, even in public schools, government schools, so where are areas that are thriving, access to better schools, even if they're private schools, Model C schools, infrastructure, safety, all of those factors play a key role in confidence, demand, and that's what drives a property market and property prices.
And Paul, after what you expect today, are you expecting further cuts? Are we going to have a good year every quarter?
Not every quarter, but so if they do 25 today, we are expecting that they'll likely pause in March and end the easing cycle with a 25 basis point cut at the May meeting.
Okay.
So that gives us a total of 100 basis points worth of cuts in total, taking into account the 50 basis point they did last year. So quite a shallow easing cycle.
And Herschel, how do you expect that to then affect the market? Do you see it as becoming more of a seller or a buyer market?
I think even if the rates cutting decision is shallow or deferred later on in the year, there is no doubt we've seen an uptick in buyer sentiment and confidence. The lending environment is extremely positive in terms of the bank's rate concessions, loan to values. In areas like the Gauteng and Johannesburg, the prices that you're buying at were last seen maybe 5 and as far back as 10 years ago. So I think the buying environment is going to remain very strong, combined with a better financial environment, better consumer confidence. And so I think over the next year, I think it's going to be a win-win for sellers, for buyers, for investors, and equally so in the lifestyle and leisure markets. I think we're going to see an overall positive effect.
And Paul, I can't let you go without asking you about the political impact on things. And I mean, we're a bit unsettled with our government of national unity at the moment. Lots being said at the moment. You'd have seen it in the past Newsweek. The DA saying what it's saying, not very happy there, but cross with the ANC and President Cyril Ramaphosa coming up to local government elections next year. What do you see as sort of, being the factors that might affect what we see happening with further cuts or increases?
I mean, I think the political environment tends to weigh on sentiment, and that tends to translate itself in how investors invest in the country, international investors in particular. So that tends to affect capital flows, and that's why we tend to see that play out in the rand as well and in our equity assets as well as bonds. But overall, I think we need to appreciate that there are risks to the government of national unity, as we've seen with coalition governments across the world. But we do believe that the ANC and the DA have common interest, which will continue keeping them working together at the national level. We can appreciate that there will be, there are times where they won't see eye to eye, and there will be friction. but they are working on a resolution mechanism to resolve some of their differences, and we just need to be patient with that. That we've come from an environment where we were a one-party-led state to one where it's a multi-party government, and we just need to be patient with ourselves.
Yeah, we're still figuring it out.
Exactly.
They're still figuring it out.
Exactly.
And then we can figure it out after that. All right, so thanks very much, Mpumulo Piane, Alex Forbes, Chief Economist, and Herschel Jawitz, CEO of Jawitz Properties. Just keep that house on hold for me. I'll see you at about 4 o'clock this
Absolutely
afternoon.
will.
All right, thanks very much. Still to come here on All Angles, Duzile Zuma Sambutla has been released on a warning after appearing in court accused